Mic check, 1, 2. Let's go. Mic check, 1, 2. Going live in 3, 2, 1. Let's go. Let's get it. We get this volume right, and we are ready to go. Okay. So thank you so much for joining the stream. I see we are 2 right now. That is more than enough. Let's go. So this is something I was working on last night. Checking out this this other strategy that I might be switching to. Actually, no, that whenever we're having like a trending environment, I think this would be nice to trade. For now, it's still in the test, and once I'm done with it, I will share it with everybody. Has to have some crazy rules, because when you have such a thing like you have here, it will eat all your money. So you have to have strict rules. So this is just the 200, and then we have like one standard deviation on both sides. It's called a Keltner channel, something like that. Keltner channel. Do I have it saved? No. Anyway, let's go back to the other guy. Let's just keep working with what we have, and let's see what the market has done from yesterday. Let me see what we can get rid of here real quick. Today is the 21st of December, so tomorrow is gonna be my last day streaming for the year, and then we can take a break and get back to it next year. So let's do that analysis real quick. Start from the monthly, though I think there's nothing much to look at, but I can see that we do have, let me get rid of this, the monthly, we do have quite a rejection, right? So that's good. Let's go to the weekly. I don't need this right now. We can get back our levels, right? Oh my god, this is too much, but don't worry, we only need this part over here, so don't be overwhelmed by what is down there. So looking at the weekly, this is kind of where I thought that would be coming back, and we did get to those levels, that previous week high, and then down to the closing price of this candle. And I see that we made our way up to down here, and we're going back. So looking at this, I can tell that we do have some sort of consolidation, maybe on the 4-hour, but we'll see when we get down there. So if we keep on going down, then this will be the next level, that all-time high. We can have some support over there. And let's go to the daily, see what we have, what we can add. We do have this. This is nice. Look at these 2 lows over there, right? Looking like strong support right there. So that'll be something that we can see price come and try to retest, but the candle is still green. So will it flip today? I don't know. So the weekly is kind of ranging in between this high and this low, but the bears kind of have it right now. The daily, I can see that, look at this up candle before this great downtrend that happened yesterday. This down candle, we did take the liquidity above this high and we closed below, so that is somewhat a bearish chart. Now if today this closes bearish, then tomorrow we have a high probability that will keep on going down. If this one closes up here, then we could be contesting this down candle, but we can see tomorrow a continuation to the upside. That is just my take. What I'm thinking is this daily low over here is going to be a factor. How we can cover that level real quick is just have like this gap between this candle and this candle where they're not overlapping, but that's just too big of a mark. And we do have levels in there, so I don't think that we have to let that stay there. What we can do is just have this that low to that low, and just what is this, that low to that low, and just have it like, you know, that is sell side liquidity. You can have like equal lows right there, which is an attractive zone for the market to come down and take those, this low and also this one, which happens to be an old daily low. So I think I'm going to, actually it's yesterday's low, and I do have an indicator for that, so that's good. So if we're coming down, that's a level that we can be looking for today. And going up, maybe come and contest this level over here. So this is kind of yesterday's for our levels. So do we need them? No. I'm going to get rid of all of them, including this one. So maybe I should have, okay, we can leave that one. So when we're going up, we do have this level to contest one more time, and that previous day EQ, and again the previous week high, where that was the highest level that this candle came to right there. So those are levels we can aim for. This is also an important level here, this up candle before we went down. So I'm thinking we can mark it as well. So the open price is all I need, and that will be a daily bearish order block, or the last up candle before we went down, and it's on the daily time frame. I think we're good. This imbalance, I don't need it anymore. We kind of went through it and above, so I don't see the need of having it on the charts. We don't need these levels. That one, this is another imbalance that we worked yesterday. I like this one here. We can still use that one, even if the wicks went through. I'd like to see the body kind of go through and close it completely. So to me, that's kind of still open. And so we do have this level, and then this equal highs here that we can see how that goes. And then we have this big pool that I will be marking because we have like 1, 2, 3 levels in there. I think we're good. What did I mark on that daily? This needs to go to the daily pool right where? Right there. This is yesterday's marking, so let me put all of them in a group, and then just in case I need something in there. The next thing we do now is let's go to the 4-hour, see if there's anything that we can use in there. Now this was yesterday's 4-hour gap right there. You can see that level has turned, yo, my guy. So support, I mean, is that support? I mean, we broke through that level. We can see that gap is now getting used as resistance, right? Because that gap was supposed to be used as support, then send price up, but we just shot down through it like it didn't exist. And we came up here, resistance, and we're shooting to the downside. So we are in between this high and this low, and that will be actually our dealing range right now. So we can focus on that high. Yo, my guy, did I put anything there? So we can focus on coming back to this previous week high level. I can just, you know, let me increase the pixels so to give it a little bit of importance, and then this low, and right below this low we do have this daily volume imbalance over here, where on the daily gap there was no whatever, those candles didn't touch, and it's this one right here. And again, I'm seeing it, it's the same thing on the 4-hour. So let me add that right there. I'll do 4-hour, and it's also on the daily. So in my opinion, I think we could be coming down, but anyway, we'll see how that goes. So we're looking at this high or this low, and just right there, look at this, at the half of that 4-hour gap, price just comes and stops right there. So that is not a coincidence. Oh, let's go down to the 1 hour. What did I add here? Nothing. Let's just sell some liquidity that we saw on the daily. Let me just have it there. We saw it on the daily. So let's kind of have it like that and up to there. Go back to the daily, see if it's still in perspective. Yes, it is. So we're good with the 4 hour. Seems like we do have some more markings here that we don't need. And I think we're good. What is this? 4 hour bullish order block? Nope. I'm gonna have it there now. Just have it as a 4 hour bearish order block. This up candle before we shut down. So I'm thinking that is an area that is likely to see price come and retest that zone, then keep on going down. But right here is kind of our main concern for this session and coming down here, or we can also just consolidate in here. So today we okay, remember also we do have this up candle before we shut down. So already we're seeing some resistance being experienced over there, being whatever the word you'd use. So let's go down to the 1 hour. I don't do so much here, just kind of to see if our story is clear. Otherwise, I think we have the most important levels. We took liquidity. I mean, we went above that swing high, went into a high time frame pool right there, or a zone, broke down with broken structure over here, and we are currently at this fair value gap over there. So we should see price being sent down from that zone. So that's a nice area to also check out to see if we can stay below it, or if we do come and close above it, then we can see we can get some support from that zone to keep on going up. So I have that one marked right there, and my opinion, I think we should go down. See how we have this slanting, this, like, we do have a high, a low, and a higher low right there, and then just right there is that 4 hour day and a 4 hour and a daily volume imbalance, right? Kind of something like this. See how we came and we closed it right here. So seeing things like this, they're usually liquidity pools right there, and that could be our price needed. Just come and close that, and we see it did trade up to this candle, and then and now we're bouncing up. So a lot of things that we can see. This down candle, this up candle has closed above it, so, and then it's now coming to sort of find support on this candle. So that could be just enough, a push enough to come towards this high. But if we see rejection, then we aim for this low and then come to this pool. If we keep on going down, then we do have the previous daily low and then back to the all-time high right here. So either way, we will be ready. As long as our entry criteria is fulfilled, we will engage. We're now the 30-minute. This is just an up candle. Look at that rejection. So right there, it seems like, yo, that's a good sell, so you can take a sell confidently. I mean, whoever took this is in the money, but whenever I see this, I mean, these things are just effect. But then again, you can't think like that all the time. You just have to choose a side. Those equal highs right there, they're just too smooth for me. If you've been watching the stream, we've seen a couple of those being taken out. So if today we can get like an entry where we can see if we can attack those highs, that would be nice. So I've been seeing quite a couple of liquidity pools that have been like, I'll mark it and then price will come and run. But knowing where price is going and you engaging with that trade, two different things, right? I mean, that's what I've come to see. Unless you just, you're willing to hop onto the trade, which sometimes works and sometimes it can be detrimental to your trading health. But once you make money, money is money. So that's the 30-minute, 15 minutes. What do we look for here? The fair value gap, it's kind of, so on the 1 hour it's small, on the 30-minute it got bigger, on the 15-minute it got bigger, but you can see that price, the candles are being held within this 1 hour. So if we come out and close down here on a 1 hour basis, that will speak something that, yo, we could be going down. If this candle, which closes in 13 minutes, closes up here, then we can see a high probability of us coming here. So if we stay in here, then I don't know, seems to me like we could see some consolidation. Let's go to the 15 minutes. This is too smooth, those equal highs over there, too smooth. And then we kind of have the same thing over here, too smooth as well. So I'm going to mark that as well. Have it at the top right there, too smooth. So again, as I said, we either come in here or we break down. So with this formation, then this is a bearish formation. If I was trading the 1 hour, then I would just come in right now and just enter in there. And my stop up here, then see if we can get here or even keep on going down to kind of follow through with this with this sort of a downtrend that seems to have begun. Do I believe this is the high of the time right now? I don't think so. I think the high will still be manipulated. It'll still drive some more up there. Remember, US500 still hasn't gotten to its all-time high. Let me switch to the monthly. Oh no, not yet, but they're quite there. Everybody else got to their all-time high. US100 did. This one, you can see we're trading above. US500 still has it, and I'm thinking that is where they are going towards. So meaning these two will also follow suit. So we still have some bearish bullishness, I do believe, but I mean, price will tell us, and we'll try to engage with the move. So 15 minutes, this is a bearish theme over here. Sort of, what is that, like consolidation, and then we broke down. So we can see us come back to that consolidation zone, keep on going down, or that mini consolidation, and this could be a fake move. We shoot up, then come back to that consolidation zone, which do have some high time frame levels here, and then send price up. What will happen? We'll find out. 10 minutes, I don't look at this so much. I used to trade the 10 minute before, and I used to trust a lot of those 10-minute fair value gaps. It would work, and of course, as any other strategy, sometimes it will fail. I was not willing to, pull through with the losses, and whatever. So I like this high, low. We broke that low. So yo, look at how this is attractive. Like, oh, I think those will be run today actually. So again, we're waiting to see after this in the next now 9 minutes if we do close above this 1 hour. But going down to the 1 minute time frame, I might have a different story. So we'll see how that goes. Now let's mark this 5 minute for some short-term levels that I think price can go to. So I'm gonna mark that 5 minute. I have a color for that, so pull this up to 1 p.m. That's pretty much the time I want to stop my trading, unless I haven't gotten a setup yet and I have a move I call a desperate entry. Then I can look for move from 1 to 115. Looking for a desperate entry. In the meantime, we do have these 5 minute gaps. If you've been watching my streams, whether we are in a trade or not, whether we are in a loss or profit, you've clearly seen the type of resistance and support that we've been getting from these 5-minute fair value gaps. They do tell a story from a scalping point of view, right? So we can see price come here, then come to here, then go up or come down. Oh, break off of that zone, use it as resistance, then keep on going down. And yep, again, you've been seeing that anytime I get in an entry and there's a 5-minute fair value gap, just where my entry is, that entry is usually a low probability entry. So let's see if today we can get like a good setup, like probably just go up and not form another 5-minute fair value gap. If we do get a short, then you can see that price will definitely want to come down here to that untouched 5-minute. Either they come and then retrace, or just consolidate, or just break through it. But so we'll see how that goes today. And I think I'm done. Any other levels? So there's no other 5-minute gap until, you know, up here. So this is where we can actually see price come. Do I want to mark that? No. It will be too much, but we can have that, you know, imaginary level over there. For the moment, it's just above this high, where we do expect to get some resistance up there. So let's see, we have 7 minutes to 12. Let's see if today we can get a win and break that losing streak, 2 weeks losing streak. I mean, there's a lot to learn from you know, having a 2 weeks losing streak. Just because you are on a losing streak does not mean that you ban your account. Keep your emotions in check. Make sure if, you know, 1.5% or 2.5% is all you want to lose in a day, stop trading. Do not mess up your win that will eventually come, right? But letting your emotions get to you. So even if you're losing, I hope you are seeing the importance of having a strong loss management system. For me, if I'm trading prop firms, 1.5% in a day is all I want to lose. I mean, including spread, slippages, then it goes up to 1.8. But after that, I'm done trading for the day. Your own personal account, that will be you. Others can go up to 15% in a day, which I think as a beginner, don't go more than 2% of a loss in a day. Sometimes the market just wants to do whatever. It doesn't matter how much of the rules you follow. You can just be out of sync, right? And then you go look later and you're like, oh, how comes I didn't see that? Yo, this price this thing is a complex game. So make sure your main thing is taking care of your capital. Capital management is the name of the game. Is it capital management, or how would you call it? You get the point. So the next thing I'm seeing is now I don't know if this thing has been hurting me. It's helped me in the past where let me get rid of this. Oh, okay. Oh, where I can only take trades if I'm buying. I'm looking at the previous 4-hour range, which would be what I'm drawing right now. So now we are in discount. I will only be looking for buys. Up here, I'm only looking for sales, right? So in the last 2 weeks, even if it's been a losing streak, there's a couple of trades that happened over here, but I couldn't take them because of that rule. Hey, when we're here, we're only supposed to sell. A couple of them were good buys that the signal did show up here, but I didn't engage with it, and I just saw that trade go away. So that could be a rule that I'm not gonna scrap it, but I can just say, yo, if we are in a strong trending environment, then we can scrap that rule, right? Otherwise, when we are ranging, that rule can help a lot. because you can see price move from up here to down here, then goes back, then and it can do it a couple of times. And but when we are trending, it doesn't have to come back down here. It can just shoot up, or they could be using a discount zone of a smaller range, like a 1 hour, on the 1 hour time frame. I think we are done. Now we just head on over to the one. Now I want to see what this level will do right here. So that this is a 5-minute order block, a down candle before we saw price shoot up, and there's a clear, that be a change of character, break of structure, market structure shift, because we were going down after breaking up the high. I think the, do I say the bias or the flow order flow changed, because now the down candles are holding price to the upside. So let's see if we can come down here and then maybe shoot up. Remember that I also say that depending on how this closes, then we could be seeing some bearishness, right? So this 1 hour candle closes in 2 minutes. So we'll monitor and see if we can keep on going down. So taking a buy here can be a little bit detrimental. But then again, this up candle also speaks a lot. So this could just be a retracement and then keep on going up because of these levels that I marked earlier. Otherwise, we do have some levels over here that we can see. So right now, I think I'm in the middle. I don't have a clear bias, but if I was to looking at the 1 hour, I think we should keep on going down. But look at those levels that is just left over there. Very attractive. So 12 is here, so let's go down to the 1 minute and let's see how that goes. See how that 1 hour fair value gap has held price. Those are somewhat important levels to have on your charts. Now I like this 1 minute gap here. If I had an account to play around with, then I'll be in a sell, have my stop loss up here. Even though that looks like some level that's going to be run, I think we can get down here fast before we go up there. How far will we go down? I don't know. Remember again, we do have this 4-hour low over here that we can see price gravitate award where it is now. Pull up this indicator that shows me 30-minute ranges, and my strategy is quite easy. When we trade below that 30-minute range and we are in the gray zone, which is discount, I mean we have the gray and the blue, or the bottom half of the previous 4-hour, then I'm looking for buys. So it would be very nice if we can tap into this 5-minute fair value gap and then come back into the range, form a swing high, leave a swing high. We can either come and take this low, or we can fail to take that low. Going up that high, that is my entry. Simple as that. So this high doesn't have to be inside of this range. It can also be somewhere here, but I do prefer when it's inside of this 30-minute range, of the previous 30-minute range. That's all. So that strategy has been hurting me the last 2 weeks, but this is a test. Can you hold on to your strategy, to your plan, even when times are hard, like when it stops working? Again, it's December. It's all good anyway. So we'll see how that goes. And now it's 12. That range has closed. So what I'm waiting for is kind of come down, trade below that, and then show me some form of bullishness of some sort. And that right there is my entry. My stop loss at the lowest low, or even this low if there's no inefficiency in between this low and the farthest low, and then look for just an easy 1:2, or in this case, I'm thinking that these levels are, we can take them. So once we get to 1:2, we can take a partial and then leave a runner to go to whatever. So these levels right here, I just hope that we are going to be in the trade if by the time we take those highs. Let me just have it right there. Yeah, I think we're good now. So just wait. Now we wait for our setup to show up. That's it. 5 minutes. All I don't want to see is, coming down, they create another 5 minute fair value gap here. That'll piss me off. I mean, from what I've seen, it kind of invalidates my entries, or they're not as strong. But I like this level up here. And then we do have this level as well, where I can say that is an unfinished 5 minute fair value gap, because the original one was, the original one was this low and that high, that gap, but we did trade into it. And so we do have unfinished business over there. And then this one, so this area here is supposed to hold price, where we see price get short down. But if we do come and close above here, then this other high and this high here are likely to be traded through. So now, what is price going to do? If we do take this high, then my bias changes. I'll now be looking for shorts. Even though we are likely to take this high. So that is kind of a downside of this thing. My best trades are usually when we take out the 4-hour low and the 4-hour high, and then it just comes back inside the range. It does fail, but when it works, you can get like some huge returns, right? It looks just something like this, and you can aim for half of the previous 4-hour range. Boom, 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 boom. Most of the time when it gets to half, it will tend to retrace back, so you want to take a partial just in case it wants to go further. But if it's gonna be bearish, just retrace back to somewhere right here and then keep on going down. So let's go look at the brothers in the meantime, when before we get a signal. So if we leave this untouched and we come up, then we can look for a short entry to see if we can come down, like to be something like that low, my entry, and then see if we can get down here. Otherwise, this guy US500, I'm sure without a doubt that they will be getting up here. So it doesn't have to be today, but that is something that we can watch out for. I also like to draw out the 4-hour ranges of this guy, of these guys. So let's just do it right now. I don't have to draw this, but in case we go up, we do have a level up there. That up this 4-hour range high, and just above it, wrong one. I can see that we do have some 5-minute fair value gap over there. My guy. So this is something that I was talking about that I'm currently, looking at. I mean, when I start trading, other sessions, this is something that, I've been noticing, where this 4-hour, I think this is in the 11 p.m. 11 p.m. to 3 a.m. I think this is London, where we kind of see like consolidation. The price is kind of, in just a small range. And then 3 a.m. to 7 a.m. we can see like, do I say manipulation? So the side it goes, you want to anticipate it to be like a fake side. And then from 7 a.m. to 11, we now get that expansion to the other side. So this will be consolidation, this will be manipulation, and then the distribution to the downside, right? So it doesn't work all the time, but if you can have that thing, you can use that logic right there. I've seen it a couple of times. Let's see if US100. Yeah, we're still monitoring this side, right? So just waiting for this the 11:30 to 12 p.m. a range. So we're waiting for price to trade below it or above it. Until then, I'm not engaging. Wait a minute. Okay, I just need so get rid of those, whatever. The other thing is I can leave the boxes, but it kind of looks better to me when it's like this. So just in case you're interested in this tool, it's called a Gantt chart. I'll show you the settings that I have in a bit. Let me just finish here. There we go. The one that I use for ranges is called market sessions, right? And then these are my settings right here. So I have it set on my time zone where I'm at, and then you specify whatever times you want. I only need 3, so they're in 4 ranges. And then this other one is called a Gantt chart. It's called a Gantt box, right? That is gonna be somewhere here, right there. And then these are the settings I have right there. You take a screenshot or just come back to the video. You choose whatever colors you want as well. It's kind of hard choosing those colors, so all I wanted is just to have a separation, and then I'm good. Now we're just about to take this low. Look at those highs right there. Attractive, very attractive. We do have these fair value gaps here on the 1 minute, but on the 5 minute we are clear. So this is something else that I used to trade as well, but now I only use it for analysis purposes, where we do have this down candle on the 5 minute time frame, and then we come and close above it like that. So what I'll do is I'll mark that high, and then this is something I had from ICT actually. You can go down to the 4 minute time frame, and then to the 3 minute time frame. What you're looking for is a fair value gap, but on the so in this case, I hope we don't get late. Let me show it to you real quick. So if the market closed like that, right, at this point, I would go down to the 4 minute time frame looking for a fair value gap, and we do have one right there. So you want to mark that. That is interesting actually. It's the same as the 5 minute. So I would be marking that gap right there, and I would note that it's on the 4 hour. I mean, you don't have to, but and then you just want to stop there. You don't have to keep on going down, and then you'll just have a buy limit in there, and your stop loss safest place will be this swing low. So, and then whatever level you think is logical, you just wait for price to come to you, and then it will shoot up. If it fails, it fails. Used to work a lot actually, but I feel like I used to miss a lot of trades because the market will just close and then kind of come there and then shoot up. I mean, you don't have to get each and every entry anyway, and then or to come and then kind of stay in there, go up, and then come take you out. So it's a good strategy anyway. So when I see that, I usually just use it for analysis. Like right now, I've noted that let me close that. That it's also it's a 5-minute fair value gap, and look at that on the 4-minute as well. So I'll just have it look like that. Now, is that a thing when we have a gap on two different time frames? What I've seen is those levels seem to hold some weight. Not hard coded, but I just like to mark that. Which was the other one that had like this one right here? So now what is happening? Back to the 1 minute. Still consolidating in here. After 12:15, I'm usually skeptical. Not easily convinced, okay? So after 12:15, I'm kind of, I don't know, most of losses, I don't want to say most, but pretty much most, have been trades that I've taken between 12:15 and 12:30. Do they work? Yes. But I think I'll remain reserved on that by not taking a trade. But if a good setup shows up, I will take it. Like for example, if we do come up to here and then we, kind of come down into the range, then I will take it. I like this level here as well. Remember that, what do we have here that could be attractive? I like this one. I hope those are not so many levels that I'm marking, but we do have this up candle before we short down. That will be what supply and demand will call supply. Up candle before we short down, paired with a gap over there. And then we do have this down candle before we short up to come down. So that will be a breaker. That will be too many markings, but that down candle over there, we should see some sort of resistance inside of this zone, right? Now, I don't know if you would consider this one or this one, because this one is kind of inside of this one, right? So up, down, up, short, down. That's a breaker. That would be a mitigation, because this one, that's a high, low, and a higher low. Mitigation. That will be high, low, higher, high. That will be a breaker. What's the difference? I don't know. Now seems like we will be taking out these highs. So swing low, failure, and then we just shoot up. I hope that we are not going to be creating any 5-minute order block. Fair value gap. Seems like we'll be creating one over here. But we do have 4 minutes. So I'd like us to come and close it completely and then go up. So this can be a straight walk in the park with no inefficiencies, right? Okie doke. Wow. Thank you for liking the stream. Thank you for joining the stream. I hope we get a win today. If I see good setups, then I will be loading up. Probably take like 3%, no, 1% and 1% and 1%. See if we can go back to our all-time high of 446. Right now we are back into the 300s. We're looking at 394. All the way up from 405, 410, 420, 424, 431, 435, 446. I think this is the highest that I came to. 446, 193. And then we started seeing a decline. Back down to whatever. So that is like 11 to 12% drawdown in 2 weeks, which is not bad, which is quite fine. 1 year ago, maybe 1.5, 2 years ago, that this account would be done. After 2, 3, 4 losses, oh boy, you start taking huge trades, so discipline is quite important in this game. Just because you're losing does not mean you don't know how to trade. Doesn't mean that your system is not working. It's just, I feel like learning the seasons is also another board game right there, right? I mean, there's always something coming up on your learning journey. So you get your loss management right, you get your trade management right, you get your entries right, you get everything right, and then something else just comes up. So it's not working because we are in a different season. So now you have to adjust, bruh. And then when you adjust that, something else will still come up. So I feel like the most important thing is your capital preservation, because there'll always be a hurdle to jump at some point. So no over leveraging, no emotional trading, trying to get your losses back on the same day. Yeah, just close your charts and get it done with them. Make sure you're journaling. You don't keep on doing the same mistakes over and over, because you're not noting down your mistakes. So we do have a level here on US. What? We're just about to run this level. I think we will. The next one will be this one, and then this high is over here. If not, then we can start coming down. It's all good. So meaning, just 1 minute. The US, whatever is coming to this level, US500. I'm finished. See how there's no inefficiency on US500? Oh, we do have a small gap here. Bruh, those gaps. Price can just shoot down and come and stop at that level. So I like to have those 5-minute fair value gaps, especially from a scalping point. So once we cross this high, there's no other inefficiency up until this level, which is an inefficiency which should not even be there because we traded below it. But then again, we have this one here, so we can mark that, which is where I think we're coming to. Okay, so we've run that level. Amazing. Are we likely to go short, man? No idea. I'll get rid of this one. Now look at this. It's too soon. So I'm looking for a short. I will take a partial at that level, because this is going to be a resistance support area. This is nice that we've come up here. So if we do see some downward movement, now look at this. This is a level from a long time ago. US100 is heading towards that 4-hour high over here, and it is really going strong. Previous 4-hour high, the previous 4-hour high for US 500 is over there. Boom. Let me know if the music is too high. Kind of sounds okay to me. Okay, let's go down. So we do have this level over here. Let me look at this 1 hour real quick. Look at that. We closed above it now, but then again we have like what, 40 minutes. So that's enough to have this reversed. But then again, these levels. So this is completely closed, so we don't need to have that level anymore. And then we've kind of traded into this one. Do I close this 1 hour? Do we need it? I don't think we do need it. What I'll do is I'll just move that level to the side just a little bit where I do have this other one, like that. So we can focus on these 5 minutes over here. That has that down candle as well. So that's marked. I feel like this is too much. Whew. Too much. Oh my gosh. Too much marking. Anyway, we've traded above this liquidity over here, so point taken, so we don't need to have that marking over there. So that is also like a good strategy. So, you know, if you kind of feel like that is where we are coming, then you can wait for like a bullish engulfing candle or whatever, or you can have amazing there when they cross. You can enter to see if we can take those levels, and once we take those levels, you want to pay yourself, I mean take a partial, then leave a runner in there. So now I think I'm willing to take a short from this level. I just don't like the fact that US100 was just about to take that previous 4-hour high and it has not, but I will still take a short. We are in the blue zone of the previous 4-hour, which is the upper part, the upper half part. So we are in premium, a good place to sell. So I'm waiting for a swing low to form, and then that will be my entry, and whatever high they leave will be my stop loss. Now this is going to be an issue right here, but maybe we can see if we'll have reduced our risk by half, so we don't have to take a full hit in case they do turn around. But then again, if we do come in and we close below this 5 minute, then there's a high probability, this 5 minute gap, there's a high probability that we can get to this one down here. I like how we have these lows over here. That looks good to me. Now look at that. Let's see if this one will close, and then let me just get ready. It's now 12:25. I prefer to take my trades after 12:30, but it can still work anyway. So do we wait or do we just take it? This candle closes in, you know what, let's just take it. I prefer if we would wait. So let me do a 0.5 risk just in case, you know, we are wrong. 1333. Candle closes in, it's closed, so sell stop. I mean, my sell stop is up here, my entry is at this low. Now if we do cross this low, then I think that we'll definitely get to this 5 minute thing over here, which will have, because this is, that will be 1:7.7. Once we get to 1:5, then I will break even, right? So let's see how this goes. I just don't like that the fact that US100 seems like they have taken this high. Not yet. Oof. Okay, it's going up. My entry is still at that low unless we form another swing low. So this is good, man. Sometimes they'll just come, tag you in, and then go away. Oh boy. See how we've completely closed that level at the tick, my guys. Look at that. Wow. Okay, maybe it's time to get rid of this short. Only 4 minutes to 12:30, so maybe we should wait. My stop loss now has to be at that high. What was I doing? 0.5. Now this is what, looking at the 1 hour, I think there's a high probability to keep on going up. Then again, we still have like 33 minutes. All that could change. So 1 hour, we went down, manipulation, came back, and now we distribute into the upside. Normally, when that 1 hour is kind of strong like this, it will usually just keep on going up. But that's not to say that we still won't get a good short entry. So my stop so far is above the high. 0.5. A few minutes to 12:30. This right here is particular. Will we get a winning position today? Will we get a winning setup today? Yes, I kind of prefer this to happen. If we can take that high at least. These guys, oh yeah, we do have like a 5-minute inefficiency over here. We have a couple of them. 1 p.m. Okay. Whew, at least they didn't tag us in. They did not tag us. So we've taken, this is the previous 4-hour low from yesterday, right? Right here. No, from a long time ago. So we don't need that level. But this is good because we're kind of going into deep premium. Now, I used to consider swing low failures. See how we kind of failed to take this swing low, and then I'd wait for my entry at the high there. So that would have worked perfectly for us. So this would have, today, for me to take this trade, would have had to trade below this low, then come back in the range. So that didn't happen. So we just keep on waiting. That would be nice. So we've taken out this other level over here, right? As I was sort of suspecting would happen. Yep, all of that range has been taken, so we no longer need that level. It's taken care of, unless you leave those levels there for journaling purposes. On the 5-minute, we do have this level here, so let's see how it will handle that 5-minute bearish order block. 5-minute up candle before we shut down. Are we likely to take these levels? I think so. So it's now 12:30 and that range has closed. Now US500. So we can close this level. We already went through that. It's now about to, my guy. It's now about to take out that 4-hour high. It doesn't have to. So I am waiting for my short setup over. Look at where we stopped at the previous day, half. Like the previous day high and low, the half of it. Look at that level. Giving us some resistance down. The important levels. Now let's see if I do get an entry here. I'm going to engage. This 5-minute has already been crossed, so thank you, sir. I just want to see a swing low form, and then that will be my entry, right? We are in the blue zone. We've traded above the previous 30-minute range. We came inside the range, waiting for swing low to form, and then see if we can. We do have a couple of 5 minutes. So this was unfinished. It's now finished. We don't need it no more. So we do have that zone over there, but I do think that we can come down here, honestly. Let's first get into a trade. So this candle closes in the next 13 seconds. Can we have that as our entry? Remember these levels here and this huge 1 minute fair value gap right there. This one closes in the next 50 seconds, so let's model that short over there. I hope it's, I mean, even if it does, it's okay. I hope it stays intact. 3378 is our stop loss. 3378, the number there at the center. And this one I'm going with a full 1% sell, stop, and I mean, right at that low. I'm sure we'll get some slippage. And to this 5 minute here, that is at least 1:2. I don't like the fact that US500 though is just about to take that high over there, and then we already have a bullish move. So this again is another downside to this strategy though. Do I say though? What do I say? It kind of forces me to go against the trend, but the time of my trading is actually appropriate anyway, because we're just about to close, right? We only have like what, 1 hour and 20 minutes to market close. So at the end of the day, you typically see that decline. But for the last 2 weeks, man, the market has just been moving upwards. Although we should still see like a retracement. At least it should be able to give you 1:2. But yo, go back to the 5. I want to see. The safest place for an entry will be this high, but then that's a huge stop loss. Unless I want to do 1:1, right? You can have it all the way up there. Nah, that's not my style. See how that candle, that wickless candle, it just went above it and then we're shooting down. If we do form another swing low up here, I will update my entry to that latest swing low. How much is 1%? 3,900. Remember, these 4 hours are untouched, so are we likely to go down there? I don't know. 4 hour low. US500 is likely to come up here as well. So if it does keep on persisting, then the others will also keep on persisting. So seems like US100 is heading back to their all-time high, and it's also a previous 4-hour high right there. So that we don't have to mark that. That's well taken care of. And then this one, we do have that 5 minute gap just above the previous 4-hour high. So actually we are looking bullish. This is church right here. Look at those lows. So are we likely to come and contest these highs? I think so. So our good place of entry would have been down here, but my signal just didn't show up. That's nice. So my stop loss is going to be at that high. Okay, in the meantime, let me look at this other. So everything is set right there. That low is my entry. 1:2 is gonna be somewhere here. But looking at the 5 minute, I think we're going to make it up to here, in my opinion. Let me see the 15. Yep. So, oh my gosh, we're still going up. The 15 minute. That last down candle on the 15 minute. Now, I believe this is what we're now coming for. Those highs right there. Ooh. So it's one thing to know where the market is going. It's another thing to engage with it. This is a huge stop loss. We don't like to do it. So US500 is about to take that high, and this one is about to contest that all-time high as well. So oof. Thank you so much for liking the stream. I will appreciate. Today no comments. Yesterday someone waited for me to lose and he was like, ooh, fail in all setups, big fail. This is kind of where we have a swing low and a huge 5-minute thing over there. So I don't like such entries, right? I don't like such entries because this is kind of where price can just come, find support, and then keep on going down, and that is where your entry is at. December, my God. This is not good enough. It needs to go a little bit deeper. You need to go up a little bit deeper. Equal highs right here, so let's look at the 1 hour. Wow, see how that 1 hour right there gave us a story, right? We did close down though, so this one still hasn't closed. It's still persisting to the upside. My God, these highs are just about to be taken out. What time is it? 12:40. So I can keep on updating this position instead of having to model it. So the rest is just automatically updating itself. All we have to change is the risk. I don't like this. Look at these highs here. Very, very attractive right there. I need to have another setting. And this is on the top. And this as well. Those highs are just too slow. This could be a trap for early enterers. I know it's going to form a swing low, but Anyway, if a setup shows up, I'll still take it. I will engage. It's now 12:42. Okay, do I still want to take this trade? This is going to be a very low, do I say low probability, but let me say very risky. I think if we did, come a little bit, if we went above deeper, much farther, and then now come down, that would be better. But see how we just got to that high. I'll still take it anyway, but let me just do 0.5% risk. So you can still work anyway. So we do have a swing low right there, and we're just about to get tugged in. And we've been tugged in, right? So my setup looks like this right there. So and they gave us, actually they filled us at that swing low. And we do have this 5-minute situation here, so we can see price get right there. That would be 1:2. But I will break even. Let's see if we can come down to this spot over here. So this is that 1 hour where we can still see our price come back. See how we kind of form, what was this, resistance, and then we broke that zone. So maybe it can come back to retest that same area. That would be a nice setup actually. So let me have this on the side, like somewhere right there. We're currently in the money, but this 5-minute, let me mark it, is going to be a problem. So what I'll do is, once we get there, I will break even. I will break even. I will see how this goes. That actually could be the trade of the day. We just see a decline. These guys can come and finish their business later. I just don't like how that was just too thin for me. And then look at what they've left here. Equal highs, some sort of equal highs right there. And then it's slanting like this. Oof, even worse. Or bam, bam, bam. Yeah, that is just too smooth. But let's see how this goes though. Bam, 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 bam. I'm still going to manage this trade. So let's do this. That's my fib right there. Once we hit 1:1, I'm reducing my risk to half, right? And once we hit 1:1.5, I'm going to break even. Now, this is going to be a determining factor for this trade, which in my opinion is kind of a risky one. So if we do close above this fair value gap, that 1 minute, then it's going to be a low probability trade. And this 1 minute up candle here, that's going to be our last line of defense. If they close above that one, then we have an even lower probability trade. Again, look at this guy, likely to be run, very much likely. So well, at least we saw some movement to the downside. So there we go. That candle closes in 20 seconds. We saw 0.59%. Okay, this is nice that they closed above that high. So if we lose this one, I'll give it another shot. High probability that trade is gone. Ooh. At this point, I'm now a liquidity provider. So if this was like your forex brokers or whatever, this is a paper. Let me have this here. This is TradingView, right? So if this was your other brokers, then that will be out because of spread. And actually, my stop loss is supposed to be above that high. Now look what they've left: equal highs, high probability that they're going to run that zone over there. But then again, yo, that was kind of a little bit obvious though. So low probability that this setup will work. Can it work? Yes, it can still work, but very low probability. Equal highs right there. Very church. Okay. Yeah, this is that 1 minute that was supposed to act as resistance. They crossed it, so is it now acting as support? Kind of. There's an imbalance over there. US100, I think they are likely to take these highs. So 1249, anytime from now, anytime from 1250, we're likely to see that 1 p.m. volatility, right? So if it does come in, we're not going to be surprised because we are anticipating, right? So what I'm thinking is, I don't know, maybe they can shoot down to this pool and then go up, or this is what we can also see, they can shoot up and then now decline. The other thing would be shoot down and then keep on going down further, or the opposite of that, go up and keep going up further. This right here is suspicious. If we can come and close below, oof, yep. Did you see that? Oh boy. I mean, we do have another fair value gap here in the 1 minute time frame right there. Is that going to hold? Dum. Equal highs. Let me take a look at the 5 minute real quick. These levels too here are kind of suspicious as well. So we can actually see price get to here. Look at that gap to the upside. Okay, let's just watch this. Let's see how it goes. These, my friends, are going up. Equal highs. US500 has dipped into that 5 minute up fair value gap over there. So that could also be a good entry at that low right there, the 5 minute, if it starts coming down. But then again, look at this 5 minute gap here. That can be a problem. So our position has been taken out. So good. Let me hide that. That was a low whatever. Anyway, I just had to take that chance because I've missed out on trades in the past, waiting for a perfect setup. So that high has been taken out. I'm gonna give it another shot. And we'll see. Still looking for shorts. We are back. We're now at 392. Uh, 7 minutes to 1 p.m. So wow, today US 500 is leading. Okay, I think I'm gonna give it one more shot. Though US 100 still hasn't taken those highs and it's likely to do it. So I'll give it one more shot. And that will be a 1.5 loss for the day. It looks something like this. And then after this, I'll go check out the other system, see if it would have been of help to us. Because man, I feel like all this drawing, all this analysis, all this, and then you still take a loss. It's kind of discouraging a little bit, but then again, you know, this should happen. I mean, it will happen, so you just have to be strong in there. Now look at that swing low right there. I like it. It just has to be confirmed first. Closes in the next 40 seconds, so let me model that trade right there. Model. Stop loss is 1665. Yo, wait, 1665. Okay, it's no longer short, so no longer swing low. So this is the swing low that we have for now, right here. Yeah, we're still likely to see some up movement because I think these guys will also want to take the high US 100. This closes in 40 something seconds. Let's see. This is another risky one. 33 seconds. And then there's a fair value gap right there. I'll still take it anyway. They'll stop 1895. If I lose this one, that's it for the day. 1895. Let's do 0.5%. Sell, stop, closes in. We do have a swing low right there, right? I believe, yes. Low, lower, low, higher, low with no wick. And we're still going up. Okay, let me just have it in there. Then we can adjust as we go. Okay, seems like we are coming for these highs right here. And I think we've taken them. Boom, shakalaka. And then we're just trading above this previous 4-hour high. Let me have that marked out. So I'm gonna have it as the second previous 4-hour range. Ooh, wee. Yes. A few minutes to 1 p.m. US100 is being reluctant to take out the high. So let me just have this here. So we can kind of see how those levels are working. And then this one, the high is right there, just where the all-time high is at. Okay, kind of conflicting. This is the latest swing low that we have over here. So this will be what I would call desperate trade right now. It's at the end of the day. We only have 1 hour, 2 minutes left until the markets close. But they still produce some good trades. So my stop loss is supposed to be above the latest, the farthest, well, above that, the swing high that they leave. So we are in deep premium. I like the fact that, you know, we've traded above this 4 hour and the previous 4 hour. I feel like we've taken enough liquidity, so we should be able to see a sustainable short. If this is left as a swing low, I'm going to update my entry to right there. See how down candles are offering support. So in the meantime, we have this down candle that's offering support right there and shooting up. So if we were to come and close below it, then we should see some movement to the downside. Depending on how this closes, then I think we'll have a swing high. So that candle closes in 39 seconds. I like the 34 seconds, and then right here is going to be a stop loss up there. So can we get a desperate entry to close the day with half the risk of what we started with, or will we see this market keep on going up? High probability that US 100 is also going to be taking those highs, so that is something that we need to watch out for. Closing in 50. Wow, they dived down. Unfortunately, that cannot be our entry. That would be nice. I think the best would be to wait. See how it offered support on this down candle? Would be to wait until the candle comes and closes. The problem is it can just shoot down and you miss out on that. So this guy was not willing to come up here, and now we can see some red candles going down. Now this is another problem here, that 5-minute situation over there. So if they do cross it and close below it, then we can be a little bit hopeful. Wait a minute, this was a swing low right here. I missed on that entry. How comes I didn't see it? So my entry should have been over there. Okay, I didn't see that. I missed that one. So my entry should have been at this down candle. It's all good anyway. So we're in. So let's see if this one is sustainable. If not, we just do another 1.5. Do a 1.5 loss for the day. I think that we should be able to get down to this area over here. I truly think we should be able to get to this 5-minute pull. But looking at the 15-minute, this was the last down candle. That's clear enough to me before we shot up. On the 10-minute, it's kind of a series of 3 candles. So what I'll do for targets is I'll just go to the next higher time frame from 1 minute. In this case, it will be the 5-minute. I'm looking for an area where we do have like a clear down candle. In this case, we do have 1, 2, 3, The 10 minutes, there's a couple of them, and then on the 15 minute, we do have this down on here. But I see that we are back in drawdown. Come on. Last line of defense will be this up candle here. If we do close above it, low probability. US100 is kind of diving down, so that's good. And then we do have an inefficiency here, which is a 5 minute. If we can get to it and close below it, that would be nice. 5 minute. And then let's update this one because we kind of went in there. So that will be an unfinished situation right there. Now I can do something crazy like add an additional 5%, 0.5% risk if we trade below this low. But then again, if I do take that loss, we can actually, let's just do it and then we just close the day with a 2% loss. That's fine. I can have my stop loss, there's no inefficiency, so I can have it above that high. Maybe I should do it in another, I'll just do it here. An additional 0.5 risk with a smaller stop loss at this swing high. Or I can just have it right there, 2226. And then see how that goes. I like this. Go lows here. This is good. I like to see those things when, you know, they happen on the side of my trade, right? Like they happen in my favor. So actually my stop loss can be above this swing high. This is our last line of defense. If we cross this low, I believe we can see price keep on going down further. Now, this is also going to be an issue on the 1 minute. We did get some support down here and then shoot up, so we'll kind of see the reaction if we do get down here. So what I'd like to see is us can get support, it's okay, and then just cross it, use it as resistance and then shoot down. Remember, we're still bullish, so this is just end of day retracement that I'm looking for, that I've not been seeing for the last 2 weeks. So we finally see it today. I don't know. It's now 1:05. The market tends to get slower moving forward. We can still see volatility, but rarely it slows down, especially after 1:15. We can see the market slow down a little bit. What was this? I think we can start deleting some levels now. I don't know what that is. We do have a gap on the 1 minute in there. This is that last line of defense. If we do close above that level, then this thing is low probability. So let's see how this goes, and then I'll hop onto the other system just to see if we used it. If we would have, I think we would have gotten a trade from somewhere here. Yeah, we'll see how that goes. Anyway, everything's been set. The stop loss is up there, everything. So let's just go to it right now. Ooh-wee. This is nice. So with this system, you don't have to do so many markings, you just wait for a specific thing to happen. Would I be involved in this trade? The answer is no. No. The disadvantage of this is you cannot get in on those retracements because you have to wait for the EMAs to align. But then it kind of saves you anyway from those losses trying to take your shorts, right? For example, I know my stop loss is up here. So if we do trade above that, then put bye bye to this whatever. See, on the 1 hour we came down to this zone 2 and we found support over there and we're bouncing up. So with this system, what you want is price to cross down the 200, and then this is the small dots you see is a 9 EMA. This gold brown whatever that is 36, the blue is 100, and that is 200 that I've said. So you want to see them down below that channel over there. Then you want to see price coming. It doesn't have to touch the 200, but once it touches that channel, which is just one standard deviation, I don't know the measurements, but it's one standard deviation from the half. So what would you call that? The multiplier is 1, so the distance going up is the same as the distance from the half point is the same distance going down from the half. So you want that to touch, and then you want the price to go below those EMAs, and they should align. An example will be this right here is good. 36 did stay above the 200, but 100 stayed below. So once it crosses like this, what now we're waiting for is price to come back and touch that channel. You can go below it, it's okay, as long as the EMAs stay intact. And when price comes and closes above that EMA, then you want to engage in a trade. Let me look for an example. This right here is an example right here. So I don't know if this would have been a loss for me. So we did cross, touching right there, and price comes and closes above. The 9 closes above 36, and these ones are well aligned. That will be an entry. Stop loss can be below that channel, or below the 200, or below the latest logical low. And I will not take anything less than 1:3 if I'm trading this strategy, because that would have been a straight loss right there, which is okay. And then again, if you're following those rules, you wait for the same thing to happen, retest, boom, nothing. So I'm trying to see where it did work perfectly, like right here. That was the full cross. We touched the channel over here. And then the moment where 9 crosses above 36 on its way back, that will be my entry, which will be here actually, right? Stop loss below 200, or below the latest swing low, or below that channel. However you want it. I would not take anything less than 1:3 if I was trading this system. So this one, I would be in the trade up to right there. Straight to the point system, straight to the point. Doesn't need a lot of analysis. And this to me would be a set and forget. It's really good when the market is trending. When the market is not trending, it can whoop you a little bit. So seems like in my time of trading, I would not get a setup today, because everything kind of lined up over here. So I'll be waiting for a retest to go up. Were there trades yesterday? Yes. There was one right here, just at the beginning of the setup, right? So no, actually there was none. But if I was not using the 100, then 36 lined up, and we had retest over there, and then to go down. So because of the 100, that would have been a missed trade. The thing is, with the 100, it kind of keeps those fake trades away. This one, 100 would have kept you from not taking it. So let me see what happened during my time. This is an example, because I was checking out this system yesterday. This is nice, and this is where the 100 keeps you from fake trades. So we did cross, a proper cross right there, and then that will be a retest, but this is outside of my trading time, and then another retest outside of my trading time. So here's another retest, and then it all aligns up here. So that would have been a loss straight right there's my entry. My stop loss below the channel, or below 200, that would be a loss right there. So Second entry would be right here, where we do have this entry. Yep, stop loss below the channel or below the 200. I would not take anything less than 1:3, which would be somewhere here, and would have taken me out around this area, right, for my 1:3. So clear system, simple to use, and you can also combine your fair value gaps, especially at your entry. If there's a huge fair value gap right there, a clear visible one, you can use that as your entry. So I don't know if I want to go back to the indicators, but I used to take a lot of losses because I will not know when to stop when the market is chopping. But once you have that loss management system, I think that will help you to deal with such. So once you hit like 2% loss in a day, no trading, leave it alone, and then have a specified range to trade. So let me see. I did a couple of them yesterday and we had some good trades. This one right here was a win. This one, there was no trade during this time, no trade whatsoever. Let's see this one. Yeah, this one, there was a trade. Actually, beautiful trade right there at the end of the session. Let me see if there's another one here. Here, no trade. The market just shot up straight. No trade unless you want to do your impulse entries. Here is another beautiful trade. Nice. So we cross this. We did cross down here, right? Complete cross. This is where we retested the 200 outside of my trading time, but it did come again to retest. You can see 100 is kind of reluctant to come and even come close to 200, and then it all aligns somewhere right there. Entry, you can have your stop below the 200 or below the channel, or if there's a swing low right there, you can use that as your stop. But remember, we do have a fair value gap where price can come to retest. So the best place to have your stop would be below this low. But then again, I wouldn't put my stop loss anywhere below that channel. If it takes me out, it's all good. But the best place for me would be below that 200 level over there. And look at that. Voila, 1:3 within the same range, and you're done for the day. So it's kind of straightforward, and you're kind of in line with the bias, with the trending whatever. So I guess I'm gonna have some more data, like 6 months, so kind of know when to not use it or when to use it. So today, disadvantage is you will not get those retracement trades, right? Kind of like how I can try to pick a top with this strategy. With that one, it's impossible because you have to wait for the trend to line up. Advantage of that is you'll never fight a trade bias. So if you're bullish, you ride with the bullishness. If you're bearishness, you ride with the flow. So is there a way to combine this one and that setup? I don't know. I think, and then you don't have to worry about all these order blocks and all that stuff. But I just like how you can kind of see on a micro level, if that's the word to use, how price is kind of reacting from those zones that we are drawing, right? So it's now 1:16. I think, unless anybody has a question, I'm going to stop my stream here. So would you like me to keep on trading this system or the other one? The other one is pretty much straightforward, and I think it applies on any instrument, right? Yeah. So in the last 2 weeks, if that system is what I was trading, then I would be, I would have made, quite some some progress, but for now it is what it is. I'm just afraid of jumping systems. I've done that a lot of times, and then when it gets hard in a drawdown, you jump that system one more time. If you're not careful, you keep on jumping systems and you'll never it will be hard for you to advance. So I'm going to update this stop loss to just this high. We already lost 1%. How many trades have I taken today? Just one, right? Count history, just one. So it's okay. Yeah, we can lose 2% for the day. That's fine. So I'll have my stop loss up there. So now this is just one. This was the first entry. This is the second one. And trading viewers combine both of them. So I'll do the same. No, let me just have them there. So this was my sell stop, and we've gotten an even better entry. That's nice, right there. Let me just make sure it's there. So tomorrow is gonna be my last day doing what? Streaming. So yeah, I'll be taking a break, and then we can get back to this next year, right? So man, it was fun. Thank you so much for checking out the channel. We will get better. The losses are inevitable, and I hope you're getting a lesson from this. Be disciplined. Just because you're getting losses doesn't mean, I've said this so many times, does not mean that you ban your account. So December has been quite a month for me. November, oof. November is getting setups like every day. Every single day, the market was just giving me a setup. It would rather give me 1:2 and then retrace and go the other way, right? But this time, man, I don't know, which is good, because then I can have enough data to kind of know, during hard times, how do we adjust? How do we do all these things? So I'm out, unless there's any comments, any requests. DR, oh my god, I hope I'm not no. Where is DR? Denmark. DR, oh my god, I don't know. Did someone texted DR in the comments? Would that be Denmark? No. So what is DR? I thought for a minute that was DR Congo. And then he put a flag in there. Ernesto Poche. It can be Puerto Rico as well. Okay, I don't know. Please enlighten me where DR is. I'm sorry for the ignorance. Please forgive me. But thank you so much for the comment. I appreciate so much. Now, will this one work out? I don't know. I'll just leave it here, and maybe it can stay streaming. I just have to leave the chats for now. 2 hours is enough chat time. Now, you know what? Let's just let me do something. Let's go back to that other system for a minute. So let's say I was trading today from 7 a.m. PST. Let me see if I would have gotten a setup. No. This is where it all lines up. Then I'm waiting for a retest, and then I want it to line up to the downside. Nope. It just goes up, lines up. So I would not have gotten a trade. So maybe wait for Asian, see if they can touch and then go up. Let me see the same thing on a different pair. Let's say like AUD USD. Where is AUD USD? AUD USD. If I was to ever trade Forex, this is a pair that I'll be very interested to look into. nothing. It just trended up. That's nice. I'm sure there's other ways to get in on that trade, but look at this here. This is beautiful. This is kind of what you want to see now. Like it lines up and then it comes to retest. So the reason I had it that it has to come and retest the 200, right? But what I notice is there's a few good trades that are happening and it doesn't have to touch the 200. So in this case, it did touch 200. In this one, it did not. So I added that Keltner channel. I don't know how the math behind it, right? To where they know the size of that. It has to be something to do with, with the volatility in the market. So if you have it at 2 multiplier, you can have even more trades. So I only have it at a multiplier of 1. Then it kind of squeezes a little bit, so that's good. So this is one trade, and this is also a way where you can stack up your entries as well. But then, if the bias is one-sided, why not? And this is on the 1 minute, guys. So just note that. So this is on a scalping level, on a scalping whatever. Touches that channel, closes above it. If 9, those dots, instead of having it as this is the MA ribbon, it's good because you can have one indicator that has 4 indicators inside. So instead of having the line, so this is how it look. I just changed that to these crosses, or you can have the circles, whatever you want. So that right there will be a trade, and then they come, we test that. No trade in here. No, I mean, there's a trade here. Let's do this. See how this will be. Okay, promise after this I'm done with the stream. Let's see how this entry will be like. We test that zone. So we're waiting for this MAs to align, and then we can get back in. So 36 remain on top of 100. Now I'm waiting for that dot to go above the 36. No. So, boom, 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 boom. Yep, that dot is above 36. So right there is my entry. And what time is this? 7:34 a.m. Okay, today in the morning. That's nice. That will be my entry. Your stop loss, you want it at the low of the latest, below the latest low, or for me, I think my optimal place will be below the 200, but the best place will be below that channel. So this is where I'd have mine, below the 200. And then I'm not taking anything less than 1:3, because I'm looking into trading this thing in, like let's say 20 to 25 trades. So let's see how this goes. So that one I would have been taken out. Well, I don't think so. So even if your broker has a huge spread, this is where it kind of plays, it's an advantage to you, because this is where price will be, and then this is where kind of the price to take out will be up here. So, but then when you're selling, it's a disadvantage. Those huge spreads are a disadvantage, but they are an advantage when you're buying, right? So in this case, I would not have been taken out. I would still be in this trade, unless your broker runs through that low, which mostly they will. You can find that 8 cap, they respected that low, and then another like capital.com, they just came up to down here. So in this case, that would have been a big gain. So, and even if let's say that one took me out, then I'll just wait to see if everything can align again, and then I can go back in with half the risk, right? So if this was a 1% risk and I was taken out, I'll do the second try with a 0.5%. So that right there will be my second entry. Stop loss below the 200. In this case, you can have it here, but we do have a fair value gap, so you want to be careful of that. So below the 200 would be okay. And then we do have a swing low that's just at that 200. So that's pretty much where I'd have my stop loss, taking nothing less than 1:3. Otherwise, Don't know if you'll survive this thing. Boom, shakalaka. This to me will be just set and forget. Now, what would make me invalidate this trade is if I get signal to go down, a sell signal that will invalidate my trade. Again, that one was very risky, right? It didn't quite get to your stop loss, which is an important thing that I placed it below that low and not at the below the 200. But then again, as I said, the best place would be below this this channel, and then you can have your targets to 1:2, right, or 1:2.5. So let's see if this one worked. 1:2.97. What are we looking at? Oh, come on. No. Oh, this is where we are right now. Okay. So if you're using this system with AUD USD, that would have been a scare right now, but you'd be looking at 1:2.2. Like, if you want to use this system, what else are you looking for? Like, I mean, there's not so much. So I mean, your work would only be to go back and back test it, and then just look at my time of trading. How many setups did I see in the last 1, 2, 3, 4 months? There's really no much thinking here. Using order blocks, fair value gaps, blah blah. No intermarket analysis. It's just straight mechanical. That's the word. Now, this is kind of what 2.2. Yeah, maybe discipline says we have to hold until 1:3, and you just wait. Now, if I put my stop loss below that channel right there, and I will do like 1:2. Give it enough room to breathe, and then remember, if it does show you an opposite, gives you a signal to go short, that will be a place to get out. That's simple. This one will also be saved if I had my stop loss below the channel right there. But mostly, it should work. Once it aligns, the main aim is to go hit my 1:3, 1:2.5, or whatever it is you want to choose as your TP, whatever makes sense to you. Works. So let's see yesterday. If AUD USD, no entry unless you want to be risky. When everything aligns, you just enter. I think it's better if you wait for a retest. Look at all this choppiness. So 100 crossed here. I want to see a retest, and then I want to see it align. Right there will be my entry. So that will be a stop loss. It's all good. And then this is outside of my trading time, but the next signal I'm seeing is touch the channel, and then it aligns over here. If you enter, boom, taken out. I mean, no strategy is perfect, right? But this is 6 a.m. in the morning. That's an entry signal right there. Beautiful, beautiful. We crossed over here. We touched at 2:35 a.m. I'm asleep at that time, but anybody trading London, that's a signal over there. Entry. We test again. Entry. Another entry here. So 6 a.m. So if I'm starting to trade at 7 a.m., then that's a missed entry. So anybody who was in front of the charts at 6 a.m., the signal is right there, and then everything aligns up over here. Right somewhere there. Stop loss below that low, or below the 200, or below here. That will depend on you. So let me see, did we get 1:3? Yes, we did. If you use the extreme one, you did get 1:3. For me, I just have it below the 200, and 1:3 will be somewhere here. Wow. entry. No much thinking, no much whatever. So again, most important, in a day, if you lose 1.5, 2%, leave it alone. Have like 1 to 3 trades. This is again on the 1 minute. So the higher the time frame, the lower the setups you will see. But I also think the better the setups they will be. I'm not sure of that, but I'm a 1 minute guy anyway. So let's go back, see how that setup is working. Oh, we are in the money. And then I'll just end it here. So tomorrow is the last day. This is what I'm going to do. I think we are most likely to get down here. So I'll just have my final TP at this 5 minute gap over here, right there. I'll just have my final TP, extend line, or I can take a huge chunk, like let's say 80% of 140 units, and then have my final TP right here at this 15-minute down candle, where I think we are most likely to come to. And that is what I'll do actually. So I'll update my TP to this down candle over there. And then let me have a buy limit of what would be, I'm gonna do 80% of 0.8 of 141 units, 112. So I can take out 112. Ernesto Poche, big shout out. Thank you for joining the stream. What was that?